Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the detail are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome to the Deep Dive. Today, we're tackling a really complex set of sources, all dated October 16th, 2025, looking at the global crypto market.
Yeah, complex is the word.
Our goal here is basically to cut through the noise, the market drama, and find the real signals. Because, honestly, the data seems to be pointing in completely opposite directions right now.
It really does. It's a bit of a confusing picture. If you just look at the headlines, the prices, it feels negative.
Definitely.
The global market cap, for instance, has slipped. It's sitting at $3.88 trillion now, so, below that $4 trillion mark people watch.
Okay.
And maybe more telling, the sentiment index, the fear and greed, is clearly showing fear. It's down at 37.
Right, 37. That's pretty low. Okay, so let's unpack this then. We've got prices dipping, fear in the air. But like you said, there are other metrics sending, well, very different signals. Let's get into that conflict.
Exactly. So the bearish case is pretty straightforward on the surface. Bitcoin down almost 10% in the last week. It's around $110,971. And Ethereum took an even bigger hit, actually, down 12.43% in the same 7 days, now trading just under that $4,000 level, about $3,957.
Wow. Okay, so clear downward pressure there. What else feeds into this bearish view?
Well, another key thing we're seeing is stablecoin volume, specifically Tether, USDT. Its volume is currently $170.87 billion.
And why is that significant? I know some analysts watch the $200 billion mark.
Exactly. Being well below $200 billion often signals that there isn't a lot of sort of dry powder sitting on the sidelines within the crypto ecosystem ready to buy the dip.
Ah, okay. So it's not just people selling Bitcoin for Tether, waiting to jump back in.
It suggests more than that. See, when total stablecoin volume drops like this, especially over a 72-hour window, it often means people aren't just swapping crypto for stablecoins.
They're cashing out completely.
It strongly suggests a move out of the crypto ecosystem altogether into fiat currency, dollars, euros, yen, whatever. It points towards, maybe retail panic or significant profit taking.
Got it. So dipping prices, fear, money potentially leaving the system. And what about outside factors? Geopolitics.
Yeah, the sources we looked at definitely cite those. There's ongoing uncertainty about U.S.-China tariffs. That's one thing. And then there's the recurring threat of a U.S. government shutdown.
Always lurking. How do those specifically impact crypto?
Well, the tariff uncertainty, it just dampens global trade confidence, right? So investors tend to pull back from riskier assets like crypto, maybe move into dollars.
Sure.
And the government shutdown threat, that creates regulatory uncertainty. Institutions, the big players, they need clarity from bodies like the SEC, the CFTC, before making huge moves. Shutdowns just slow all that down. Gridlock.
Okay. So panic selling, maybe capital flight to fiat, geopolitical headwinds.
Yeah.
It paints a pretty bleak short-term picture.
It does.
And this is a big but. There's one area where the data is screaming the opposite. ETFs.
Ah, yes. This is the real puzzle, isn't it?
Yeah.
Despite all that fear, the index at 37, the total ETF inflow in just the last 24 hours was, staggering. $338.82 million.
$338 million flowing in, while prices are tanking and sentiment is fearful.
Precisely. And that's not typically retail money fleeing. That suggests institutional accumulation, smart money continuing to buy.
But wait a second. If institutions are buying almost $340 million worth through ETFs, why isn't that stopping the price slide? Shouldn't that buying pressure absorb the selling?
That is the million-dollar question, or perhaps the $3.88 trillion question. It could imply that while ETFs are seeing inflows, there might be larger, maybe less visible over-the-counter sales happening elsewhere.
Like a transfer. Retail selling off, institutions quietly buying it up.
It could suggest something like that, a shift in who holds the assets, maybe from less experienced retail or older funds to more long-term institutional hands. And the type of inflows adds another layer.
How so? What's the breakdown between Bitcoin and, say, Ethereum ETFs?
This is where it gets even stranger. Ethereum ETF inflow was $236.22 million. Bitcoin ETF inflow, only $102.66 million.
Whoa, much more into Ethereum. That seems backward given Bitcoin's dominance, especially during market stress.
Highly counterintuitive, yes. It suggests these large players putting money into ETH ETFs might be anticipating something specific for Ethereum, maybe regulatory clarity coming soon. Or perhaps they see ETH as a better long-term growth play and are using it to diversify while managing Bitcoin volatility exposure.
So, smart money accumulating, possibly strategically favoring Ethereum right now, even as retail seems to be heading for the exits.
That seems to be the dynamic. Retail panicking into fiat while institutions use regulated ETFs to build positions. It definitely sets the stage for volatility.
Okay, huge volatility potential there. But let's shift from that short-term, confusing picture to something more fundamental, something that isn't easily swayed by daily sentiment. The network itself. The Bitcoin network.
Yes, this is probably the clearest macro bullish signal we have in all the sources. The Bitcoin mining hash rate. It just hit a new all-time high.
How high are we talking?
An incredible 1.143 zettahashes per second. That actually beats the previous peak from September, which was around 1 zettahash per second.
1.143 zettahashes. For listeners who maybe aren't deep into mining, explain why that raw computing power number is so important, maybe more important than the daily price.
Absolutely. It comes down to network security and, frankly, commitment. The Bitcoin protocol automatically adjusts the mining difficulty roughly every 2 weeks, every 2016 blocks, aiming for a consistent 10-minute block time.
Right.
So when the hash rate hits a new all-time high like this, it means miners are actively deploying more resources. They're plugging in new, powerful, expensive hardware. They wouldn't be doing that, spending millions on electricity and these specialized Asia colleagues, unless they had very strong long-term confidence in Bitcoin's future profitability and security.
Regardless of this week's price dip.
Exactly. It's a long-term bet on the network itself.
Let's try to put that number, 1.143 zettahashes per second, into perspective. It's mind-bogglingly large.
It really is.
Our sources mention the network is essentially making 1.16 quintillion guesses every single second to solve the next block.
Quintillion, yeah.
To give you a sense of scale, that's like every single person on Earth guessing 140 trillion times per second.
It's just immense computational power, and the energy required reflects that.
Yeah, the electrical consumption figures are pretty staggering too. Enough to power something like 15 million homes or an entire country, like Sweden.
That's the estimate. It's arguably the most powerful, most secure, decentralized computing network ever created.
It's wild to contrast that with the very early days. Didn't some early developers think Bitcoin might, max out at $100 a coin?
That's the lore, yes. Shows how far it's come. The network's infrastructural commitment is enormous now.
So the takeaway here is, despite the short-term price fear we discussed, the fundamental security and the miners' belief in the network are stronger than ever.
That's the clear signal from the hash rate, yes. Structural strength is increasing.
And that growing structural maturity, that robustness, seems to be paving the way for more traditional finance involvement. Which brings us nicely to our next section. Institutional gateways opening up, particularly for some key altcoins.
Right. And the big news here, the real validation this week, involves Solana, SOL, and Ripple's XRP.
What happened?
The Chicago Mercantile Exchange, the CME Group, a giant in traditional derivatives, announced the very first trades of options on both SOL and XRP futures.
Options on futures. Okay, getting sophisticated.
Exactly. And these weren't just any futures. They were micro SOL and micro XRP contracts offering daily, monthly, and quarterly expiries, so very flexible tools.
And who was trading these? Was it a small test?
Not at all. The trades happened October 12th and 13th, and the players involved were serious institutional names. Ventmute, Superstate, Cumberland DRV, Galaxy. These are major players in the space.
Wow. So what's the real significance of having these listed on a regulated exchange like CME?
It's huge for institutions. Directly holding spot crypto assets can involve complex custody and regulatory hurdles. These regulated derivatives, like options on futures, give them tools to manage risk, hedge their exposure, speculate on volatility.
Without actually having to hold the SOL or XRP directly.
Precisely. It lets them get exposure and manage risk within a familiar regulated framework. It's a massive step in making these specific altcoins more accessible and, frankly, palatable for traditional finance.
So the CME is basically signaling that SOL and XRP have reached a certain level of maturity, liquidity, and institutional demand.
That's exactly what it implies. It's a critical step towards more sophisticated, regulated crypto derivative markets beyond just Bitcoin and Ethereum. Institutions can now build more complex strategies around them.
Interesting. Now, speaking of Ripple, XRP's issuer, despite their market cap recently dipping below Binance's BNB coin, a drop of over $20 billion, I think.
Yes, that's right.
They seem to be pushing ahead very aggressively on the institutional and utility front, regardless.
Absolutely. Their whole strategy seems focused on enterprise use cases and navigating the global regulatory landscape. We just saw a major announcement out of Africa.
Oh, yeah. What was that?
A partnership with Aspect Bank in South Africa. They're launching institutional-grade digital asset custody services there. This is a big move for Ripple in Africa, building on their previous work with payment providers like Chipper Cash and their RLUSD stablecoin efforts.
So focusing on custody, a key institutional need, and elsewhere.
They're also expanding in the Middle East, a new partnership in Bahrain with Bahrain Fintech Bay. This region is known for being quite collaborative with government entities on fintech.
And Ripple has had some regulatory wins there recently, right?
Yes, with the Regal Financial Services Authority, so they're clearly leveraging these friendlier regulatory zones to build out their infrastructure and partnerships. It's a smart global play, while the U.S. situation remains, well, uncertain.
Strategic footholds.
Yep.
And it's not just Ripple making these global moves. We're seeing exchange giants do it too. Coinbase.
Yes, Coinbase is making a significant push into South Asia and the Middle East. They've just invested in India's CoinDCX exchange.
India. That's a massive market. Huge tech sector. Over 100 million crypto owners. Why CoinDCX specifically?
It looks like Coinbase isn't just buying market share. They're essentially acquiring local regulatory know-how. India's crypto regulations are complex, and CoinDCX has navigated them successfully.
So it's about buying expertise to operate in that tricky environment.
Seems like it. And what makes the timing really interesting is that this investment comes just a few months after CoinDCX actually suffered a pretty major hack. Around $44.2 million was lost earlier this year.
Wow. So Coinbase still went ahead with the investment even after a major security breach.
Apparently so. It suggests that for Coinbase, accessing that huge Indian market and, critically, CoinDCX's regulatory expertise outweighs the short-term optics or risk associated with that recent hack.
That speaks volumes about the perceived value of regulatory navigation skills in these key emerging markets.
It really does. It's a long-term strategic play.
Okay, let's widen the lens one more time now. Moving beyond specific crypto assets or companies, let's look at the foundational tech infrastructure being built, particularly in the Middle East. Saudi Arabia seems to be making huge moves.
Absolutely massive commitments there. It ties directly into their Saudi Vision 2030 plan, aiming to diversify their economy beyond oil. We have two really significant announcements from KSA.
What's the first one?
It's about the literal foundation data centers. A technical cooperation agreement was just signed between Verity and EasyGITEX. This happened at the GITEX event in Dubai.
Okay, what's the goal?
They're planning to develop and deploy highly energy efficient, sustainable, kind of future-ready data centers across Saudi Arabia. You can't build a leading digital economy without that core infrastructure.
Right, gotta have the plumbing. And the second big push sounds like it's more cutting edge.
Definitely. Focused on artificial intelligence, AI. A company called Humane, which is owned by the Public Investment Fund, the PIF, and is leading KSA's AI efforts, has partnered with Sender 3.
Sender 3.
Yeah, they're a subsidiary of the big Saudi telco SDC group. Together, they're building the core digital infrastructure for what they're calling the Saudi AI Hub.
Okay, an AI hub. Why is that relevant for, say, our crypto-focused listeners? How does that connect?
It's incredibly relevant because AI and blockchain technologies are increasingly converging. This AI Hub initiative isn't just about AI, it's about building out massive high-performance computing capabilities.
The kind of power you need for.
For really complex AI workloads, yes, but also potentially for large-scale blockchain operations, validation, maybe even sophisticated DeFi protocols down the line. By making these huge investments, Saudi Arabia is positioning itself as the regional powerhouse for all advanced digital tech, from AI to DLT. It mirrors that long-term conviction we saw from the Bitcoin miners, but on a nation-state scale.
That really brings it all together. Okay, let's try and synthesize this deep dive. We started in a place of market fear, prices dropping, retail seemingly spooked, some geopolitical uncertainty hanging over everything.
Definitely a fearful start. But then, when we looked deeper, we saw these incredibly strong, almost contradictory long-term signals.
Right. Signal number one, the Bitcoin hash rate hitting a new all-time high. Fundamental network strength and massive miner commitment.
Unshakable conviction there. Signal number two, major institutional validation, specifically the CME listing regulated derivatives for Solana and XRP, opening the doors for big players.
And signal number three, the global push. Institutions setting up shop with custody solutions in places like Africa, strategic investments happening in Asia like the Coinbase deal, and entire nations like Saudi Arabia building the underlying digital rails for the future.
Exactly. So the synthesis is, the market might be driven by short-term fear and volatility right now, but the underlying structure, the network, the regulated pathways, the institutional adoption, the infrastructure build-out, all point towards sustained long-term maturity and expansion.
The short-term noise versus the long-term signal.
Precisely. And that leads to a really interesting final thought for you, the listener, to mull over.
Okay, what's it?
We've seen Solana and XRP get this key validation via CME futures and options, giving institutions risk management tools. We also see Ripple aggressively pushing real-world use cases, like custody and cross-border payments.
Right.
So the provocative question is, what will ultimately be the bigger catalyst for mainstream institutional adoption of these kinds of assets? Will it be real-world utility actually solving tangible business problems like Ripple aims to do? Or will it be regulatory clarity and de-risking provided by things like CME listings? Utility versus clarity, which one truly tips the scale?
That's a great question. Utility or regulation is the final key. Something definitely worth pondering.
Indeed.
Well, we hope this deep dive has helped you cut through some of the confusion and given you a clearer perspective on the conflicting signals in the market today. Definitely check out the details in your own sources based on what we've discussed.
Yeah, context is everything right now.
Thanks for joining us. We'll catch you next time.